how to tap into your home equity. Hello, homeowners and future homeowners. This is KG. I'm a realtor with Fairfax Realtor, and welcome back to my channel. Today's topic is how to tap into your home equity wisely. So, whether you are eyeing some renovations, investments, or debt consolidation, understanding how to leverage your home equity is crucial. But before I dive into this, please make sure you subscribe to my channel so that you can get updates when I upload new videos weekly. Thank you, thank you, thank you, thank you. So, home equity. For many homeowners in the last few years have been a gold rush. You know what I'm talking about? Homeowners have gained more than 100,000, depending on your market, on equity. In DMV area, I have homeowners that have over 100,000 in equity. So how do you tap into this equity, right? Overall, over 1 trillion, like T, was added to the total US home equity since last year. This is a jump of about 7.3% year over year, according to CoreLogic. So, although home prices have been cooling, home appreciation has been cooling recently, many homeowners are still flush with equity. But it's just equity in paper. It remains locked in their house until the homeowners sell the home or tap into their equity through various means: cash out refinance, home equity line of credit, or home equity loan. So today I want to talk about how to tap into that equity. Tap into it. Your most popular ways, without selling your house. 3 options: cash out refinance, a HELOC, what is called, or home equity line of credit, or home equity. All these 3 work different ways and have different time period for when you receive the funding and when you pay it back. So keep in mind, these are financial products that help you tap into your home equity that you may need for remodeling your home, investing, how to build wealth using your home equity. I discussed that in a different video. Go check it out. It's not free money. You have to pay it back over time or in a lump sum when you sell your home. So let's talk about how a cash out refinance works. So a cash out refinance allows you to access your home equity through a first mortgage refinance. So you have a mortgage and you want, instead of getting a second mortgage, you do a cash out refinance. That means you refinance for what the value is, because you have the home value has gone up and you get cash out of it. Unlike a second mortgage, which is a home equity line of credit or home equity loan. So when you do a cash out refinance, it essentially replaces your current mortgage. Generally, you need to have at least 20% equity left in your home when you refinance. Some lenders can allow you to dip down below 20%, but you know what that comes with? Private mortgage insurance. Don't do that. So if you do a cash out refinance, you want to at least have that 20% equity so you do not have the private mortgage insurance. So a cash out refinance replaces your existing mortgage. So it's important to listen to this. So the terms will change. You may elect to shorten the amount of time. That means you can refinance from 30 years to 15 years, or you can actually start another 30 years. The big factor when you do that is also the cost, the closing cost. When you do a cash out refinance, there's always a closing cost that is associated with it. That can be between 2 to 5% of your new loan amount. The second option is called ELOC, which is called Home Equity Line of Credit. So how does ELOC works? ELOC functions more like a credit card. So the lender extends a line of credit for an amount based on your equity on your home. So if you have 100,000 equity on your home, they can extend credit towards that amount. Then you access those funds as needed. You write a check, a lump sum or just a little bit, and you can take everything at once and then pay off over time, or just a little bit as you need it. So it depends on what your options or what your preference is. So how much credit you get likely also depends on the equity you have in your homes. So lenders usually also require to retain at least 20% equity in your home. There are some lenders, when you're doing ELOC, that allow you to do just 15% equity. There are others that allows you to borrow 100% of your home equity, like Navy Federal Credit Union. They allow you to take 100%. HELOCs are paid back in two phases, so you can pay back HELOC in two phases. They have a draw period. This is the time frame that borrowers have access to this line of credit, usually between 10 to 15 years. During this time, the HELOC usually has adjustable rate, which can adjust every 6 weeks, 6 months, depending. And borrowers are only required to pay the interest each month, so you can just pay the interest on the loan each month. However, you can also choose to pay both the interest and the principal. It depends on you during that period of time, during that draw period. But once you get into the repayment period, once the draw period is over, now you cannot touch any more of your credit, but you must now start repay what you have borrowed. So your payments can get higher, right? If you have over the time borrow and you didn't pay, your payment can get higher. So this is where budgeting and planning comes into play before you get into the repayment phase of this loan. The key is to actually have a better handling on higher bills. You want to know. Generally, borrowers have 20 years to repay their HELOC and the interest rate. So once you get into the repayment period, the interest rate switches from an adjustable rate into a fixed one. So you have 20 years, and if you sell your house before that 20 years, they'll take it out. It's already a lien. The third type is called the home equity loan. Home equity loan allows you to get a second mortgage. You get a second mortgage and use your home as a collateral, right? So you get a lump sum. You can borrow up to 85%, so you can borrow up to 85% of your equity and you get a lump sum, and that lump sum is available to you right away. Many lenders will allow you to borrow at least 85%. They want you to keep at least 20-25% equity in your home. So home equity loan tends to be fixed rate loan. Unlike cash out refinance, home equity loan do not replace your mortgage, which is actually good. If you have a low interest rate right now and you want to keep your low interest rate, you don't want to refinance, you keep it and you get a home equity loan. For home equity loan, borrowers typically have about 20 years to repay their home equity loan, but some lenders are now going up to 30 years, you guessed it. So cash out refinance versus home equity versus home equity line of credit, which one is good? So cash out refinance can be attractive for borrowers seeking to lower their interest rate, but in this period, lower interest rate is not working right now. So if you have anything below 5%, cash out refinance may not be good for you because interest rates are rising. But in the future, if interest rate goes down, cash out refinance may actually be an option for a borrower that currently has a high interest rate. You know, refinancing can also, cash out refinancing can also be expensive. When you're talking about the closing cost, can run between 2 to 3% of the refinance value, not your current loan, but your refinance value, and this is added to your loan. So this can get costly, right? So you may not want to look into that. Generally, personally, I prefer HELOC, or home equity line of credit, or home equity loan to cash out refinance. HELOC or home equity line of credit do not affect your current mortgage. You can keep your low interest rates and still get cash out from your home. So HELOC also tend to have lower closing costs than cash out refinance, and the interest rates on HELOC are also lower than average credit card interest rates. So which one is good for you? It depends on what your financial situations are. Right now, the starting interest rate on a 20-year HELOC as of December is about 7%. This is considerably lower than the average interest rate on credit card, ranging now between 20 to 24%, depending on your credit worthiness. So the question is, do you have a repayment strategies? You want to also have repayment strategies when you are deciding between a HELOC, home equity line of credit, and home equity loan. So the HELOC can be beneficial for people that don't necessarily need a big lump sum right now, but just want access to cash when available. Some people choose to open a HELOC in case of emergencies. If you have emergencies, you can just tap into it. And some never use it, they just know that it's there. However, a home equity loan, on the other hand, commits you immediately, because you're getting that money into a large sum of money, which is fine if you already know what you want to do with it. Especially since the payments are going to be fixed over 20 years. So definitely you should look into that. So the question is, should you tap into your home equity? This question is tempting, right? Because it is tempting to pull out thousands and thousands of dollars from your home before you take that step. It's always a good idea to answer a few questions. What are you going to do with that money? Are you paying off high interest loan, or investing the money back in your home via upgrades, which can be fruitful, because you increase your home equity? For example, if you need a large amount of cash to update, you don't want to get a personal loan, and you don't want to change your first mortgage, a home equity loan might be an attractive option for you. On the flip side, you are borrowing against your home. You don't want to borrow for unnecessary expenses like vacation. Nah, I don't like that. Do not borrow against your house to vacation. No, because you can quickly rack up debt using your home as a collateral. You also want to look at what sort of payment schedule works better for your budget. Remember, these are money that you have to pay back. So if you prefer a same amount monthly, a fixed same amount monthly, you may want to do a cash out refinance if you have a higher interest rate, or a home equity loan might be a better option. On the other hand, if you want to use your HELOC like a credit card, then HELOC can be a great credit line of credit when you run into a jam. If you are uncertain about how much money you will need, so you just take out what you need if you have HELOC, instead of putting yourself into a lump sum debt. And then you can tap into your HELOC and pay the interest and the principal as you draw them, which many times last 10, 15 years. And this will end up, if you're not careful, being a huge debt. So you want to be cognizant of that. But if you don't have a solid plan to cover that debt, foreclosure can be inevitable. You don't want to do that. Whew. So how do you tap into your home equity with bad credits? Because I have some homeowners that have bad credit. Is it still possible? Yes, it is possible. First, you want to improve your chances of loan approval by paying off subsiding debt so that you can increase your debt to income ratio or boost your credit score, ensuring that you have sufficient equity in your home. Like I said, the home equity has gone up so much that you probably have equity. The other way to get equity if you have bad credit is to find lenders. We have lenders that are willing to work with bad credit. You want to shop around and get quote from several mortgage lenders. I always advise my clients, you want to look at community banks or credit union. They are more flexible than your big national banks. So when it comes to underwriting standard, especially if you are already a customer of that community bank or credit union. So are you ready to tap into your home equity? You want to look at the pros and cons to make sure you know what you're getting into. But it is a great way to build wealth. Check that video on how to use your home equity to build wealth. If you need advice and want to find out how much equity you have in your home, please reach out to me. I can let you know what the equity is and give you advice on how to go about it. Until next time, happy house homeownership. And if you're not a homeowner, listen, it's never too late to become an homeowner so that you can benefit from this equity that we're talking about. And please don't forget to subscribe to the channel to get updates once I upload a new video. Until next time, happy investing, happy home equity. Remember, it is your home. Use it creatively.